I got it. 102. Before we went live.
Welcome, everybody. Hey, how are you doing? We're here. It's Captain Seth, it's Uncle Paul, and it's your boy Trader Mo. Trader Mo is again sitting in. Mo, how are you? I love you.
How are you?
That heavy set shirt is really hiding your pectoral.
I could probably make them jiggle.
Yeah. So, I thought we both all agreed that you were wonderful on the show last week. You were replacing Gio, my son, as our full-time analyst.
Sorry, Gio. You're irreplaceable, though.
He'll be back, though. He'll be back. But Trader Mo is on. We have some exciting announcements with him, but we welcome you all into our Tuesday, Thursday live streams at 1 o'clock. We're happy you're here. Paul is giddy. We just hit 100 people prior to going live, which is absurd, guys, especially for Paul and I and Don. We had some long years here, Paul, where you and I were talking to ourselves in a room about investing in business growth, and sure enough, now people like you want to hear us, and so we're thrilled. Some other amazingly positive things that have happened for our channel because of you watching. We hit 13,000 subscribers this morning, which is insane growth for the week. We're growing every single day, more and more and more. Paul and I and Don are having meetings and plans, and in association with Mo, about how this channel gets to 100,000 by the end of the year is our new goal, and 1 million, Paul said, by the end of 2022.
No, I said 500,000 by 2022.
Half 22. And so we're going places, and it's because all of you, and we can't thank you enough. Our Patreon list just hit 500 patrons, which is absurd. We never even thought this could happen. In fact, Paul and I had arguments about even opening up a Patreon because Paul did not want to ask for any more money, and I kept saying that people...
Without providing value. I wanted to provide value.
And now we are providing what we think is great value on the Discord, the discussions, and so I'm hot to trot today. I'm feeling phenomenal, Paul, and I want to welcome in the man of the hour, Paul Gabriel. Is it Gabriel or Gabriel? Either way, I love you. How are you? You look great in white. And show the ladies those shorts.
Oh, everyone. I brought the shorts
look
back.
At those shorts.
I had to bring the shorts back. These are
there's a little
RVCA.
They're nice. They're hugging your butt cheeks in a beautiful manner, which the guys and gals love. And
which camera am I looking at? Camera 2 or camera 4?
Camera 1, camera 2.
Yeah, exactly. It's camera 2.
Yeah,
Thank
right
you.
there. There you go. Yeah. So anyway, here we go.
So I don't know.
Anyway, you guys are awesome. We appreciate your help and your support. And if you're in our Patreon, let people know in the chat if you're a patron member and how much you love it. We have enormous plans this year for patrons. We are brainstorming on a daily basis about more giveaways to our patrons, how we can give more to you. I told Paul we need to be interviewing patrons as whole shows, and so all this
Can
and
we
more.
talk more high level about that?
Please do, Paul. Go ahead.
Guys, we're going to focus this entire YouTube channel on driving more for the patrons. That's exactly what we're trying to do. It's about getting you guys involved with the software, and the software will be coming out by April 15th. It'll start out with the financials and the 8 pillars, and I'll keep adding more and more to the software, more and more programs. As long as you're a patron, you get the software for free. But as you know, I'm a guy who likes to increase things, so everybody's getting in now. These are the lowest amounts ever. We only have 140 spots, I think, available left for their $8 patron. Only 90 spots left for the 25. The $25 patron group now is going to be the Trader Mo group, where you can come in and learn charts and talk to them every day about charts. But again, you still get all the software and you get your Discord channel. But once the $8 patron is full, which at this pace will be about 10 days from now, then you will no longer be able to get our software at $8 anymore. It'll probably go up to $12, and that group will be limited as well. So we're going to limit these groups as we grow. Our goal is to get 10,000 patrons by the end of the year. It'll be hard, but we're trying to do it, and that way people who are buying in now are getting the lowest price in the future. So please don't be penny wise and dollar dumb. Go sign up for the Patreon. Trust me, it'll be well worth it. You'll get the software for free while you are a Patreon user. You'll get other discounts, other things we do. And we're going to provide a lot of separate content just for patrons. We're going to be building separate things just for the Patreon level. That's what our goal is. The Patreon becomes our main focus.
Rehard is asking, why is there a limit on Patreon groups? I would say, folks, that once our groups fill up, you guys will be your own community. So when our $8 group fills up of 200 of you, we will be interacting with you as always, but you guys will form your own community and family, and we will open up a new higher level group. So we can open up more patrons, but I assure you, Paul, we are not looking for thousands, hundreds of zillions of people patrons. This will be a very exclusive group.
We're trying to build it to people who are actually serious about learning and getting part of the community. And part of that will be by increasing the price over time. So the sooner you get in, the better it is for you.
And we'll cut this short sale down here a bit. We're not going to go about Patreon forever, but 2 of you, our patrons this year, will. I'm sorry. When we reach the $50,000 and $100,000, 100,000 subscriber count, 2 of our patrons will be getting Tesla Model 3s straight out of Uncle Paul's wallet. And so that we're going to do some more promos leading up this year. That will happen. Now, before we get going into energy stocks today, which is why you're here, we are going to talk about a bunch of companies. People have been asking for FANG, Diamondback Energy for a long time. We will do FANG first. We're going to talk about Exxon, BP, Chevron, Shell, Valvoline. But first, I want Mo one more time. Trader Mo is going to tell you what he's giving you in the $25 level. We did get some comments about what do I get, how do I bump from 8 to 25, and what am I getting? And Trader Mo is here to describe. Trader Mo, tell me what's up. How you doing, baby?
I'm good. How are you?
What can the $25 level people be expecting from you, their interaction with you, and what you're going to be teaching them?
So we've completely turned the $25 level into the chart reading level. So we've done everything from day trading to we're starting to get into some short-term trades, and we actually got into one long-term trade today. So I'm making what I found out is that I really like recording 1-minute videos and sending them to the patrons about the questions that they have. They're asking me about specific stocks. They're asking about me teaching about candlesticks and patterns and whatnot. So I actually got into a trade today. I told them the exact reason I was doing it. There's 2 patrons today that went in there and did a quick day trade. So this is kind of what you guys are going to get from me. I'm there all the time. I'm answering all of your questions, and it's nice that everybody's kind of starting to learn, so we're bouncing ideas off of each other. And I mean, we bought 2 stocks today that I never would have looked at, and we're looking at them now. So it's going to be a great community.
Before we get into FANG Energy, for old time's sake, Dom, one of our patrons, said,
yes.
Can we please have a small moment of likeness? Just please take your thumb and just tickle that thumbs up. Oh, just tickle that little thumbs up like you're tickling Paul on his way. I'm starting to sound like a leprechaun. Just tickle Paul's belly.
What you're doing over there.
Just tickle Paul's little belly and tickle the thumbs up for us. I don't know why I did that, but that's just really good stuff. All right, folks,
mate.
Shall we get going? Paul, I love you. Let's get in. This is why you're here. Our 8-pillar killers out there. We're coming up with a nickname for you guys, and I don't know if YouTube's going to like that one, but we're thinking about it. The 8-pillar killers. Paul, let's do FANG. You've been asking for it. We're going to get to it. Talk to me about this company, Paul. I love you.
Let's first talk about energy in general. So I tend to shy away from energy. A lot of people asked for it in the past, and I shy away from it, and here's why. Energy prices fluctuate immensely, and a lot of these companies, their profit and loss and revenue can jump up and jump down. This will be a good exercise for me to find more stable ones, but I want to also show you guys how natural gas and how oil prices have fluctuated over the last 50, 60, 70 years. When you're dealing in energy, a lot of companies can go under if there's big bear markets in energy. Like, look at Chesapeake Energy. That was a huge company for the longest time, and they went bankrupt last year or the year before that because natural gas prices were so low, they couldn't even make money off of it. So if you guys remember last year, oil prices actually went to the negative at one point. So these are the things that worry me. I like more stable, predictable businesses and more stable and predictable methods of generating cash flow. So just to look at it right now from the standpoint, this is crude oil over the last 70 years. Look at this chart, guys.
Can you blow that up a smidge, Paul? Or that's
I would love to. Nothing would make me happier.
By the way, folks, while Paul does that, this week, we are going to do a deep dive on Palantir. We're going back into Palantir to do a full deep dive analysis. The same thing goes for Pfizer, and we will be releasing a video on GameStop and the absurdity that's going on with GameStop this week. So stay tuned. Paul, go ahead with that chart.
Guys, look at this chart. I mean, it was pretty low and stable, and then big jumps during the energy crisis, back down, big jumps, back down, back down, back down. And it started to go up, and then all of a sudden, a huge jump, plummet, huge jump, plummet. I mean, these are massive fluctuations in price. I mean, we're talking about $20 level on crude oil at one point. I mean, this is costs go up from 1980 to today. These are just hard ways, and I just look at this saying, oh my God, I have to worry about not only have to worry about the company, I have to worry about the prices of the underlying asset that they're buying and selling. It's just, I tend to not like that. This is natural gas, a pretty similar chart, I guess. This is going back not far enough. How far back does this go? All years. Well, let me do all years. All years.
We appreciate the thumbs up tickles we're getting out there. Keep going, Paul.
This is just since like 1995. Look at this fluctuation in natural gas. I mean, this is insane, guys. So I look at this going, it's been a bear market for the last 10 years. Might be now the great news is, when you see this, it might be an opportunity to buy. Because you sit there and say, wait a second, is it likely that natural gas goes to zero? No, it can't go to zero. I shouldn't say it can't. It won't go to zero over long periods of time. So you have to sit there and think, okay, maybe we're in a low inflationary environment. Maybe this will jump back up. Energy could be a good sector to look at long term So that's why we're here looking at it. So let's go to FANG. FANG,
What is the market cap for this company?
let's first start by talking about Diamondback Energy is an independent oil and gas producer in the U.S. The company operates exclusively in the Permian Basin. Does anybody know where the Permian Basin is? At the end of 2019, the company reported net proven reserves of 1.1 billion barrels. Net production averaged 280,000 barrels per day at a ratio of 66% oil, 18% natural gas liquids, and 16% natural gas. Okay, so market cap, $9.6 billion. Our first wonderful thing, PE, X, it's negative. In the last year, they've lost $4.27 billion
Uh-oh.
on $3 billion in revenue. So we have a profit margin that's also an X.
Oh boy, the Permian Basin's in West Texas, Paul. Keep
Thank
going.
you. 2.45% dividend yield. So immediately I'm going, okay. By the way, you should be able to get higher dividends from energy companies. They tend to use that as a way to pay out their, but I look at this going, more, they lost $4.3 billion and they're paying out call it a $250 million dividend a year. Okay, so we have two X's to start.
Uh-oh. Pillar number 3 is profit or revenue growth, Paul?
Okay, so let's look at revenue growth annually. Now, it is a check mark for revenue growth, $446 million to $3.95 billion. There's a check mark there. But again, this is over the last 5 years, but this is through 2019. In the last 12 months,
What could that be? Probably bad, hey?
well, we look at the last 12 months, it was $3.14 billion in revenue. So the revenue is declining over the last 12 months. And like we said before, their profit was terrible.
Should we look at profit growth? Pillar number 4?
Now, profit growth. Now, here's a great reason why we're going to love the Everything Money app. The Everything Money app will not look at the most recent reported full year. It'll look at the last 4 quarters. So every single time we're looking at the numbers on the Everything Money website, it'll be the last 4 quarters, which will be more representative of the last year. So when we compare years to years, we can look at that, which is wonderful. So profit over the last few years. Negative $550 million to a positive $240. So check mark there. Yeah. So it is a check mark here, but I mean, this isn't big. I mean, look at these. Lost 400,000, lost 36 million, made 55, made 200, lost 550, lost 165, made 42, made 846.
These numbers are all over the place.
Exactly. That's what I don't like about energy. It's all over the place. I'm a boring investor. I like to have more consistent revenue and profit.
How about number of shares outstanding? Pillar number 5.
Look at this bad mamma jamma. 63 million to 164 million.
Oh boy, Paul.
That is almost tripling the number of shares outstanding, which means, guys, what this means now is, I have to do my notepad thing. This means that in 2015, if there were 10 shares outstanding and you owned one, you owned 10% of the company. In 2020, now they roughly have 30 shares, you still own one, you have 3.3% of the business. They diluted you from 10 to all the way down to 3. It's actually more like 4.5 or something like that. They diluted you big time. I do not like that. There might be a reason for it, but I do not like that. So right now, we're in X city here. I think we have one check mark, and that's the revenue growth, correct?
And profit, yeah. But
oh yeah, the profit. The profit's a technicality, whatever.
Yep, for sure. Current assets over current liabilities is pillar number 6.
Okay, current assets are $558 million.
Go on.
Current liabilities, $1.23 billion. So X there as well.
Oh boy. Okay.
Free cash flow.
Folks, I've been around this guy enough where I sort of know, I can see the signs when he's going to be done with this company, but keep
I've already
going, Paul.
done.
Free cash flow growth, Paul. Let's do it.
Remember,
baby.
free cash flow, guys, is cash from operations less your capital expenditures and what they use to pay out dividends. We need a $250 million. They pay a $250 million a year dividend. This is going to the end of 2019. We're going to look at the last 12 months as well.
Okay.
So, minus $500 million.
Oh boy.
Minus $800 million.
Okay.
Minus $2.5 billion. Minus $2 billion. Minus $1 billion.
Okay.
So X on that, X on free cash flow less than 20 because they haven't had free cash flow forever. You know how they're paying their dividend?
Be careful, Paul.
They're probably paying their dividend by issuing more shares, taking the cash, paying the dividend, or taking on more debt. Bottom line is, guys.
Nick is asking, how does this company still exist? And Paul, I'm sorry, Don, I would agree with you. This has been one of the most requested companies.
Yeah.
I've heard FANG, like it's the best. What is going on?
I think the big
what are we
reason
missing?
was-
Tell us in the comments, folks, what we're missing, because
You know why it was so requested?
Go ahead.
A lot of people at one point were buying FANG stock thinking it was Facebook, Amazon, Netflix, and Google.
come on.
They thought it was the FANG stocks. They thought it was Facebook, Amazon, Apple, Netflix, and Google.
That's happened a couple of times with acronyms like that. People go in and buy an acronym that they think is
Like Signal.
the company. Exactly. So
I see.
Yeah.
Okay.
So anyhow,
What's your
how is this company still in business? That is a great question. I have no idea. My point is, guys, this could be a massive turn. If oil prices skyrocket suddenly, yes, you're going to love owning this stock. But at the end of the day, I don't want to have my bias show up here because I'm not right on everything, and you have to invest in a way that makes sense to you. This does not make sense to you. To me, it might make sense to you. More power to you. I'm not going to argue with that one unless you start using reasons that don't make sense for it. But I'm just avoiding this company altogether. And I think we're going to see a lot of this in all the other companies we look at.
And that was FANG, folks. Yeah, whoever requested it, there you go. Yeah, that was a tough one. That was brutal. The next one is Exxon Mobil, Paul. Exxon Mobil, you are still looking so good in that white shirt with your chest. You're lifting. You're looking great. I mean, not as good as Mo, but you're looking great.
First off, F you.
Okay.
Secondly, my dad jokes with me recently. He's like, all you do is wear these clothes to work? I'm like, yes.
It does look like you're going to a volleyball game most days.
Yeah.
All right, Exxon Mobil, Paul. Let's do it.
Now, Exxon Mobil is a
on.
$195 billion company. Now, this is a bigger oil company. I like these more than the natural gas for some reason. I think they're more consistent. But we'll find out here as we look. PE ratio. Is 60 good? X.
No, that's not good.
Profit margin in the last quarter was negative. In the last 12 months, though, they had about 3.4% profit margin. So still an X there.
We want it to be 10%, nowhere near that. So
7.5% dividend. So on $195 billion, let's call it $14 billion that they're going to pay in dividends.
this is one of the largest dividends we've seen in
Huge.
a while, Paul. This is huge.
So they need to generate over $14 billion a year in free cash flow for me to feel comfortable with this dividend. If you remember from Chesapeake Energy, it was, I don't even know how exactly somebody said, how the heck did they stay in business? I have no idea.
Let's look at the revenue growth over the past 5 years, which is pillar
Would you
number
look at it?
3. Look at that.
We're gonna look at
that.
it.
Yeah, let's do that.
All right, ready? 240 billion to 255 billion. Check mark there.
Nice slow pace.
But look at the last 11 years, 10 years. 467, 451, 420, 395, 240, 200, 237, 280. I mean, this is as you saw natural gas prices decrease, what'd you see in revenue?
Is that a question for me? You know, when you ask those rhetorical questions, I don't know if I'm supposed to answer them or not.
Okay, so net income.
Profit
Now-
growth is pillar number 4.
They have profit every single year. 16, 7, 8, 19, 7, 20, 14. It's an X. And they have lost a lot of revenue in the last 10 years, and that's why their profit's gone down, but they still make money, which is a good sign.
Okay, how about shares outstanding, which is pillar number 5?
I'm shocked to see this. This is an X as well.
Oh, no.
4.2 billion down up to 4.27. It's not by much, but it still is an increase in the shares outstanding.
That's 4 out of 5 are X's. Let's do pillar number 6 is current assets greater than current liabilities. And let me pause real quick and make sure. What we're really trying to do, folks, is give you a process, a thought process when analyzing these companies. This is why we're coming out with the software. This is why our patrons will be getting the software that's included, is you'll be able to run these 8 pillars much more quickly than Paul and I running through Y charts. You can run them instantly on your desktop and get you some information that you might not have ever existed. So many channels, we think, we did this because so many channels are just talking about hearsay and trends, and we want to give you a process. So if you're not grabbing this quite yet, just stick with us. It's taken me a couple years to stay with this, and it's easy enough for a 10-year-old because my son is currently watching and can do some of these calculations as well.
And 3 very, very smart people signed up for our Patreon in the last 19 minutes.
That's very nice of you.
That's how fast it's going to fill, guys. We are averaging 20 plus a day. It will fill quickly. Please join. You are dumb not to.
Current assets over current liabilities is pillar number 6. This is for Exxon Mobil.
48 billion versus 56 billion. Now, I do think oil companies tend to have an X, and these tend to have, I don't know why, but I think they tend to have that. I don't remember exactly, but That's the way it looks.
How about free cash flow? This is a big determining factor for you, Paul. The free cash flow growth over the past 5 years.
Oh boy.
Cash from operations minus capital expenditures.
Let's call it $4 billion and versus $5 billion. So it's a check mark. But how the heck do they afford? Okay.
A $14 billion dividend, Paul.
$6 billion, $15 billion, $17 billion.
Oh boy.
So 10, 25, 42, 47 divided by 5 is $9.4 billion a year. Times 20, which I think is high, is $200 billion, which is about where it's at right now. It's $190 billion. So it is a check mark essentially on the price of free cash flow, but I don't know how they're affording their dividend. Let's see what their trailing 12 months is.
Yeah, going back for Exxon, this was a 7.5% dividend, which equated to about $14 billion.
They have negative free cash flow in the last 12 months. Well, what are you seeing from the charts? Why do some more research on this?
So they've been on a heck of a run for, let's see how, this is going back to the beginning of November. But as of today, actually, they just turned into a downtrend. So
Today,
as in right now. This is the first day that they've broke. If you guys are in the Patreon, they broke into that sweet spot area. So this is something that we're going to look at as a short. So if somebody's in the $25 level for the Patreon, right in there XOM, and we'll keep a watch on it and do some learning on it this afternoon.
What that means, if you're not a patron member, is StockMo will go in and discuss with all the $25 tier members your exact thoughts on this trade, what you're doing, and where your money's going, and they can certainly get on board if they're interested. So,
all right. So I mean, guys, I don't know how they're affording this dividend. Maybe it's more debt. Let's see if they're issuing a lot more debt. Total long-term debt.
Did I just say StockMo instead of TraderMo?
You did.
I don't know, but if you did, I'm leaving.
I'm leaving the show. Yeah, I'll be off the show. Please don't listen to StockMo.
I don't know how they're doing it. All right, so guys, this is what I'm saying. Like, I look at these oil companies, and Warren Buffett owns a lot of energy companies. He likes energy. He understands it better than I do, obviously. I don't get this in general. They have definite profit, and over long periods of time, your revenue and your cash flow and your profit should be the same. But if you look at their profit over the last 10 years, they're showing massive profit in the last 5 years. What is this? 23, 42, 62, $76 billion versus $47 billion in free cash flow. So there's a big disconnect there. I don't know what it is, though.
So these are things that I totally agree with Paul. I do not invest in energy companies like this. For me, if I'm going to invest in them, it's going to be based on charts. And that's because I don't have to worry about any of this stuff. I could just go based on my patterns. So that's kind of the only way that I'm investing in energy companies.
And from a momentum standpoint, guys, this did hit a negative. The blue line's a 200-day moving average. The orange line's a 300-day. When the blue line goes below the orange, it's a negative trend. It hit that right here at around 78. If you shorted there, you'd be up a lot of money right now.
And B-Rad is saying they borrowed to pay their dividend. The CEO said he was staying by the dividend because of the investors with oil prices
and increasing. That happens a lot. But I'm looking at the long-term debt, and it wasn't increasing. It didn't increase that much over the last 5 years. They're doing a $14 billion a year dividend. Maybe the dividend's changed, but I'm not seeing $100 billion in more dividend.
Going back to momentum, Phoenix is asking, can you use the 50-day versus the 200 at all when you're looking at momentum?
Listen, the big thing on momentum is sticking to a structure. Mm-hmm. Whenever you do momentum, even value investing, sticking to your system, the way people don't do well is they deviate from their system. You're going to see that a lot with our website and app. It's going to stick. It's going to give you our triggers that hit our buy levels, and the way to do well is to follow them all. When you start picking and choosing, that's when it's bad. 50 versus 200, I'm sure it still does well. It's just we found that 200 versus 300 did the best because it was more long-term momentum driven.
Yeah, we went through and back tested a lot of these things with the different moving averages. We tried all different combinations, and we found that this one worked the best. So that's the reason that we use this one.
That was your take on Exxon Mobil, Paul.
Yep.
And speaking of momentum, how is David S. Pumpkins is asking, how is momentum on those shorts chafing your legs?
There's no chafing going on, kids.
Okay.
These are just.
Don't lift them, please. We don't need a little camel knuckle there. Okay, let's go. The next company, Paul, the most exciting company is a BP. We've had a lot of people asking about BP for probably the length of the show over the past year.
I bought BP at $15.
Yeah, we did do some buying and selling last year.
And 2 months later, I sold it for $25.
What's it at now?
Got lucky. $23.
Ah, okay. So we did well back then.
Yes, we did.
Let's look at BP.
All right. $78 billion market cap. No PE for BP because they lose money. Their last quarter, they lost 1%. And the last year, they lost about 11%. Sick. X there, too. Double X. They cut their dividend. Their dividend's 5.5%. It was 8%. So 5.5% on $78 billion is what? $4 billion, roughly? A little bit more than that. So their free cash flow needs to be in excess of $4 billion. I hope it's better than Exxon Mobil. So we have 2 X's so far.
X's. This is not going well. How about revenue growth over the past 5 years?
Oh, we have a check mark here. 223 to 278. Check mark there. But just like Exxon,
Yes.
they did 375 in 2011 when oil prices were higher. Okay, so it's looking very similar to Exxon Mobil.
Profit margin? I'm sorry, profit growth. Thank you.
Negative $6.5 billion to $4 billion. Check mark there.
Okay.
All right.
Shares outstanding, Paul. We want this going down. Pillar number 5.
It is not going down. 3.05, 3.38. X marks the spot there.
Not as bad as Exxon, but okay. Current assets over current
No,
liability.
not as bad as Chesapeake Energy. I think Exxon was barely higher.
Diamondback, you mean? Or FANG, yeah.
Yeah, FANG, sorry.
Oh, that's okay. Current assets over current liabilities is pillar number 6.
70.8 billion versus 58 billion. So a check mark there. So better than Exxon, because Exxon was upside down in that one. This one's in the positive.
Now people, Bogdan is reaching out to my wife to try to get us to do some stock. So they're taking shortcuts to trying to get to us. I love you guys. Current assets was an X or check?
Check mark.
I wasn't listening, Paul. Free cash flow.
should.
Free cash flow growth is pillar number 7.
Okay, free cash flow growth. 500 million to 10 billion. So check mark there.
That seems pretty good.
Yeah, -6, 2 billion, and 6 billion. -6, so those wipe each other out. 2.5, 12.5 divided by 5 equals 2.5 billion.
So the average free cash flow over the last 5 years is 2.5 billion, Paul.
Yep, I already got that.
I'm just stating it for all of our homies watching.
Oh, gotcha. So times 20 would be 50 billion. It's currently at 78 billion.
Yes.
So that's an X there on the price of free cash flow.
Let's slow down for our new viewers. Paul is getting that free cash flow number, and then he's multiplying it by 20 and getting what he thinks is a market cap of $50 billion. That's what he wants to pay for BP.
Well, that's where we're going to start at looking at it. And
Right.
it's like, it's already way higher than that. It's selling for about 30 times free cash flow. It's kind of expensive. The good news is the last 2 years, they've been able to afford that dividend. And let's see the trailing 12 months. The trailing 12 months of free cash flow, 4.2 billion, so barely able to support the dividend. I mean, this is just really tight, guys. I don't know. I mean, again, do what you want with it. I mean, the reason I went into BP was at that point at $15 at that level in time, it was selling for an astronomically low level compared to history.
So BP is a perfect example of what is called a dog stock. And there's going to be a video that comes out next week about what dog stocks are. They're kind of stocks that just keep declining, and sitting on the bottom of their trend. And then they slowly start to pick up, and that's when you can capitalize on them. I've capitalized on BP twice in the last 12 months. And like it was the first time we made a killing on it. The second time I made a killing on it. And these are just very easy things that we can see. So this is another thing that we talk about. I think I talked to the patrons about this yesterday. So this is a great way to trade companies like this that are really terrible financially, or you don't know which way they're going financially.
So unless you think we're in a very low level for this stuff, for commodities, for natural gas and oil, I'd avoid these. By the way, 3 more patrons just signed up since I announced the last patrons who signed up. So we're I'm telling you guys, get in now.
We appreciate your support. Paul, I would say there's something interesting. There's some sort of mutiny going on with the chat. It's being led by David Spicer, which of course I'm not surprised. We love you, David. And he's saying that we should probably look at like oil transportation companies.
Okay, so give me one.
Well, go ahead, folks. We're open. I mean, these last 3 are complete. They're not what Paul is interested in, and they're not what Paul would ever invest in. And so I can understand how these are kind of not doing that great. So let's see what they. Oh, here they. Oh God, Paul.
Jeez,
you opened
man.
that up. Here's 20 more. Okay. All of these. Okay. We're gonna. Don, can we switch a bit?
Absolutely.
Oh wait. Don, say hi. Can you hear me?
Yeah.
Oh, there's Don, folks. Don is here. He sounds like the voice of God. He is here.
He's the Wizard of Oz. He's behind the
Paul, will
veiled.
you pull up TNK and we'll see what that is. We have a couple people chiming in that that's what they want. Whenever you're done swiping on Bumble, go ahead and pull up TNK for the patrons here.
I'm no longer swiping on Bumble.
Oh, so this is interesting. Look at this now.
Oh,
So,
wow. Look at this PE ratio.
If you're joining us now and you're seeing this video later, we look at companies off of requests. Paul and I have never heard of this company. There is zero due diligence, I assure you, but we're taking a 500-foot look at this company, maybe using our 8 pillars to see if we want to dive deep into their investment. Is this a good investment for us? So this is TNK. I don't even know what company this is, Paul. What is it?
It is called Teekay Tankers Ltd.
Of course, Teekay Tankers.
They're based in British Columbia.
Okay, Teekay Tankers. Here we
Small
go.
company, $350 million market cap. Look at this PE ratio. This is one of the lowest we've ever seen.
Wow, 1.6.
1.6, check mark there. Their profit last quarter was negative 26%. But last year, it was 22% margin, so check mark there for the last 12 months.
This is double checks. I love this. 1.6 PE. This is
no
wonderful.
dividend.
Okay, keep going, Paul. Let's look at the revenue growth over the past 5 years.
Boy, look at this chart, by the way. Max chart. Look at that.
Would you look at?
2008, they were at freaking $175, $195 a share. Okay, revenue over the last 5 years. You ready, kids?
Go ahead, Paul.
498 to 899. Check mark there.
Now we're talking.
Okay.
Profit growth, Paul, pillar number 4.
The profit growth is 183 million down to 41 million. So X there. And look at the last 5. Look at this profit, guys. Look at the last 10 years. You ready?
Go on.
This is what I want to point out here. Negative 113, negative 370, negative 2.7, 60, 184, 68, negative 58, negative 52, positive 41.
What does that tell you, Paul?
All over the board. Guys, I still think the tanker is going to follow a lot of oil prices because as oil prices are higher, the companies want to, the BPs, the big ones want to get more and more of it. They want to produce more of it. When it's low, they want to produce less of it to drive prices higher. When it's high, they want to produce more of it and take advantage of the high price and make as much money as possible. So I do still think these tanker businesses are going to still follow in line with these other companies. So it's still all over the board in profit. In fact, in the last 5 years, their average has been 250 minus 110 is 180 divided by 5 is what, 90? No, 90, no. What am I talking about? 40?
36.
$36 million is the average over the last 5 years. And it went like this. I mean, it was like this. I am not a big fan of that. I like consistent earnings and revenue. That is the way I am programmed in my brain. I'm not saying it's the right way, but that's the way I'm programmed in my brain. I like consistent. That's why I like the options so much, right, Mo? We talk about the options going, hey, listen, I'm going to go create so much money in options consistently. I'd rather get low return, but more consistent.
This is TK Tankers. This is ticker symbol TNK, where the profit growth is in X, Paul. It's all over the place.
Yep, profit growth in X.
This is pillar number 5, which is number of shares outstanding.
18 million to 33 million.
Uh-oh.
X. Almost diluting you by half, guys.
You just put a check and then X did great.
Oh, did I put a check in
Yeah,
there?
you're funny.
I
love
don't
you.
know. That's not what
Current
I was after.
assets over current liabilities is pillar number 6, baby.
251 million in current assets, 156 million in current liabilities, so check mark there.
Nice.
Let's see what the real free cash flow is.
Free cash flow.
Okay. Well, I like, oh, this is interesting. Negative 650 million. Noted. So look at this. This is weird. Look at their capital expenditures over the last 10 years. Negative 4 million, 4 million, 2.5, 1.9, 5.8, 850, 9.2, 4.7, 5.8, 11.6. This is almost a weird year. I don't even want to look at it. So let's look at the other years. Let's look at the year before that. That's about $15 million in free cash flow versus this last year was $106 million in free cash flow. Check mark there.
The free cash flow is going up.
It is going up. That's a big jump, guys. Okay, then we're going to do 197. Then we're going to do 76. And then we're going to do negative 13. What do we got, Seth?
The average free cash flow over the past 5 years is $76 million.
Okay, so according to this, it's selling for 5 times free cash flow. So check mark there on the price of free cash flow.
This is pillar number 8, price to free cash flow.
Let's look at the last 12 months free cash flow.
The gears are spinning inside Paul's head. Make sure you guys are tickling that thumbs up. He likes his belly tickled.
Well, this might be interesting. I don't know. This one's a tough one for me because I look at those thinking, okay, you really got to do a lot of research on this one, understand what, because it seems like it's so cheap. Provider of marine services to the global oil and natural gas industries and an operator of medium-sized oil tankers, businesses to own oil tankers. Company has 2 segments, tanker and ship-to-ship transfer. Okay, I mean,
Max Equity is saying they bought $1 billion worth of tankers last year.
That would what year?
2019.
It's not showing up in that cash flow statement.
Maybe I'm wrong. Maybe they are wrong. Interesting company, huh?
Yeah.
Do you even have a final take home on?
Do a lot of research on this one because the numbers look pretty decent. If you're able to withstand the ups and downs, what do the charts look like?
I mean, it looks like all the other energy charts. It's right now. This is a short. It's turning into its downtrend, and I don't know. These are hard. This one is specifically hard. It's just very up and down. And frankly, when we do our value investing and we run our back tests and screeners, we eliminate energy. We just eliminate the whole sector before we buy an energy. So right now, Paul and I are learning banks. We're attempting to learn banks, financials, and whatnot. We're going to be buying banks before we're going to be buying energy. That's something that I could tell you is almost 100% true. It's just a very, very difficult sector to be in. So that's it. But we can definitely trade this on charts. Again, that's an easy thing to do. And
I've obviously joined that
join the mid-level and bring them up, and we can do these for sure.
Enterprise Products Partners LP, EPD, based out of Tejas.
Yes, the next company you guys are requesting is EPD, Enterprise.
Rent a car?
Yep, Enterprise Products. Paul, let's take a look at EPD.
$46 billion company, 10.3 PE, check mark there. Margin, 15%, check mark here, another 15%, check mark there. Now, we have 2 check marks so far, and a dividend of 8.5%.
Wow, come on, baby.
Which is a $400 million a year dividend payment, roughly.
We will keep that in mind when we're looking at free cash flow at pillar number 7.
So far, pretty good, pretty good. Now, what do they do? Let's first off look at what they do. Also, transportation and processes natural gas. It's one of the largest midstream companies with operations serving most states, over 48, blah, 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 blah.
Before we keep going, Paul, I want to interrupt, and you don't like this, but I heard a hilarious joke, and I have to just tell it. Paul, what's the difference between a good joke and a bad joke? Timing.
I have no idea.
What's the difference between a good joke and a bad joke? Timing. Okay, you can use that one. It's not mine. I don't lay claim to these, but it's a funny-ass joke. Timing. It's just timing. Pillar number 4, pillar number 3 is revenue growth over the past 3 years for EPD Enterprise Products. 5 years. What am I saying? I'm out of my mind.
Okay, $27 billion to $33 billion.
That's
check
nice.
mark.
Okay.
So we have a check mark there. But again, look at the previous 5 years. They were over $40 billion. That's what happens when prices collapse.
Pillar number 4 is profit growth over the past 5 years.
2.5 to 4.6.
Wow.
Check mark there.
They're loving this.
Guys, please don't dilute the hell out of the investors. Please
Share
don't
is
dilute the hell out of the investors.
Share is outstanding.
They didn't dilute the hell out of us, but still. 1.97 to 2.19. So X there. A slight dilution, not big, not huge, not even 10%, about 10%. So if you owned 1 out of 10 shares, now you own 1 out of 11, you're diluted about 10%.
Pillar number 6 is current assets greater than current liabilities.
Okay, that number is 8.8 billion versus 7.8 billion. So check mark there.
Nice.
So far, this is going pretty well, guys.
This is 5 out of 6 checks. Pillar number 7 is free cash flow growth.
Guys, big capital expenditures. Big capital expenditures.
What is that again, Paul?
That means they're putting a lot of money into, it takes a lot of money to keep this business going. I don't like that very much. They have to invest a lot back in their fixed assets to maintain and grow the business. Look, 200 million in free cash flow and 2 billion.
Wow.
So check mark on the growth.
You ain't lying.
But now 1 billion, 1.5 billion, and 1.9 billion.
Oh boy, you want me to try and get this?
Okay, I got it.
Go ahead.
Ready? 2.5, 2.7, 4.6, 6.6 divided by 5 equals 1.32.
3.2. The free cash flow over the past 5 years, the average is 1.32 billion for EPD.
Now, I will say this is skewed heavily to the 200 million part, so I'm going to go higher.
With your multiple, your
Maybe
price
it's
to free
20.
cash
Maybe it's
flow
a
multiple?
maybe it's a $30 billion company. I don't know, something like that. But it's still it's still less than it is today. But it's not terrible. I think this is a company to watch for. I like the fact they consistently. I don't like. Here are the positives: consistent profit, consistent free cash flow. The negative: a lot of capital expenditures to maintain that business. I don't like that very much. Right? You have to spend a lot of money to keep maintaining. The good side of that is it's hard for companies to come and compete because they got to spend a lot of money to get into that business, right? So from this perspective, it's still overpriced by, what was the market cap? Oh, they can easily afford their dividend, it seems. Because their dividend was what, $400 million, and their free cash flow was $2 billion. In the last 12 months, it has been $2 billion also. So they can easily afford their dividend. That's the good news. So this dividend looks pretty safe from that standpoint. Let's see their total overall debt. Is it going? Total overall debt's only up about 10%. Not even. Yeah, about 10%, even though the revenue's up a lot more than that, it seems. All right, so I'm not opposed to this company. And okay, Mo, what do you see on the charts?
So again, this one's turned into a downtrend just 2 days ago. But the interesting thing that I'm seeing about all of these companies is if you back out a year, all of them have kind of hit they've gone up about 50% to their previous high, and they've just hit that resistance level and bounced down. So this is something that I've talked about in the Patreon group. It's about the 50% rule, which I call it. There's going to be a video coming out on YouTube about it, but this is something that when you really zoom out of a stock and look at it, you can see that there's a lot of resistance at some point, and all of these energy companies are hitting that right now.
Guys, your friend Paul's a moron. 8% of 46 billion is about $4 billion in dividends, not 400 million. So this company can't even afford their dividends. Don, let's not make this into a video later because this is absolutely asinine. That was dumb of me. I did quick math and it was wrong. This company, I don't even know how they afford their dividend. I don't get this. Like, how do they even afford this dividend? Can somebody explain that to me?
Yes, the people are agreeing that math is difficult.
Is that what they're saying?
Yes.
F off.
And you
people.
haven't had your Coke
Mason.
Zero, so.
Oh, that's Mason saying it. Mason's the biggest troll of all time. Let's actually ban Mason.
He does provide a lot of.
He wants to be in charge of our merch when it finally comes out.
Oh,
That's
yes.
a perfect job for Mason.
Folks, if you're in Patreon, we should start up a channel. A few things we want to do with the Patreon is I want to jump on Patreon and talk to you guys live. Maybe something kind of behind our dad Paul's back, maybe, and just learn a little bit from you guys about what you want to see, creative ideas on videos we can do, and then people are asking for a lot of silly things, Paul. I mean, they obviously they want beard grooming tips. This stuff's hilarious, and I would say we're working on the wrestling match between Paul and I.
COVID sucks.
So COVID is very interesting in that we're trying to find a wrestling mat and some people to judge. We're going to try and get the sumo suits. It will happen. And we're also thinking about other crazy and zany things we can do. I think we've discussed at 1 million subscribers. Paul's against this, but I would get his face tattooed on my rear end.
You got to stop saying these things and everybody's going to be like...
I'll do it. I mean,
that's
hilarious. Yeah, I mean, that's just
my
hilarious.
own tattoo on your butt.
Yeah,
great.
your face on my butt cheek. I mean, it's not my first butt cheek tattoo, but
You have other butt cheek
more?
tattoo?
I do, yes.
Come on.
Yes, I do. I have my wife's name.
Seth has
No,
a
you
lot of
don't.
tattoos.
I have my wife's name on my rear end and vice versa.
in the
No,
crack.
you guys don't.
Absolutely. I didn't show you this before.
I've never
I mean, it's
seen
nothing special. I mean, I could whip out my. I'm not going to show you. What would YouTube do if I whipped out my butt cheek, Don?
Probably take us down.
It's like a low butt cheek, though.
I don't think it matters.
Well, for the Patreons, we could. I mean, it's nothing special. It's just like a little cursive Beth, but anyway.
We got 3 more signups for the Patreon.
So regardless, folks, obviously your support.
Guys, sign up.
Your support is monumental to us. We've hit another record. Every time we go live, we get a record number of people viewing us. So it's absolutely absurd. And do a video on Seth's tattoos. No, Rick, that's a bad video. I regret the tattoos as I'm getting them. So like it's don't let's not do that. Yes, YouTube would explode. Show it live. They're saying. I mean, let's see it. This got weird. Dave, you're right. This did get what a funny sequence. So in the Patreon, Let's converse about some funny skits and bits we can do. We want to get you guys involved, guys and gals involved.
Beth just said she would show hers too.
Well, yeah. Oh, I see. Yeah, no, it's not. Yeah.
I'd rather see Beth's ass than Seth's
same.
ass, to be honest with you.
And David says, "What's low butt cheek?" Don, I don't think this is a butt. This is really a butt. But I don't think this is a butt cheek. I mean, what do you think YouTube would do? Can you look it up? It's like a high.
Mason said OnlyFans.
Yeah. Oh, there we go. Yeah. An everything money OnlyFans. But listen, let's. Yeah. Oh no. Just okay, guys. You guys, Seth on OnlyFans. Listen, what we'll do is we'll off camera. I'll show when Paul's analyzing one of these companies. I'll show Mo here or Don what a low butt cheek might look like, and no one wants to see this though, right?
I'm speechless right now.
Okay, guys. Okay. All right, guys. Paul, should we keep going? What do you think?
I mean, I think we've seen a pretty consistent look at the way energy is. Energy is just a tough cash flow business. I don't think we've seen a very consistent way of covering the dividend when the ones have dividend. I just want to exercise caution to you guys and say, don't look at energy the way we look at Microsoft or Google or other consistently growing businesses that aren't going to be fluctuating as much. I understand if businesses fluctuate based on the economy, but it's not like there's some commodity out there that's going to have a lot of volatility that's going to drive the prices of Microsoft software or Google search, something like that. That's always my reservation on these.
Paul, I have another one. People are asking for this. KNOP. KNOP. I don't know if this is a joke or for real. This is not Offshore Partners out of United Kingdom. Not shuttle tankers. Do you want to look at this?
I mean, look at this dividend. It's a huge dividend. Let's see if I can do math correct this time.
Okay, let's do this.
$565 million market cap, 8.8 PE, check mark. Wow, look at this profit margin.
What is this? What's going on? Holy
I mean, this is 35% down here, and down here it's every bit of 30-some%. So this is a check mark here.
Okay, double check marks off the bat.
Now, dividend yield of 12%. 12% of $560 million is $67 million, roughly.
Are you sure, Paul?
I know, do the math for me, please. Would somebody do the math for me?
What is the number?
564 times 0.12.
564 times
0.12.
0.12. Thank you. It's 67, Paul. Oh, you're right. Great.
Oh,
He's
back, baby.
I can do it. I'm back, baby.
He's back. He's back. Okay. Revenue growth over the past 5 years is pillar number 3. This is for... What company is this?
Not.
This is not tankers. Okay, keep going.
Have you seen that Borat not when he learns to not like how to
It's
say
like the
not?
timing joke. It's the timing.
Yeah.
Okay, keep going.
155 to 282, check mark there. And look at this revenue growth. This is what I like to see.
Go ahead,
62,
Paul.
73, 112, 154, 173, 212, 278, 283. I love it. All right, next one.
Profit growth, pillar number 4. Profit growth.
Okay, 40 to 59, check mark there. Still some ups and downs a little bit, 40 to 61, 68, 82, but it's still in the positive. It's not fluctuating to the negative. I like that.
How about shares outstanding, Paul? I would say you do get fired up when there's companies that we've never heard of because we love those. We don't. We don't want all the hype stocks. We want the ones that no one's ever heard of. So keep going. This is shares outstanding, pillar number 5, baby.
25 to 33 to 32.7 X. They diluted you about 30% here, guys.
People love the pie. Can you show the pizza one more time?
So guys,
what they're doing?
The pizza pie. Everybody does like that one.
This is shares outstanding. Yep, go ahead.
This is a suggestion from one of our patrons. You have a pizza pie right here, and it's cut into, let's call it 8 slices right now.
Mm-hmm.
And you own one of the slices. Not bad, right? A dilution is basically them taking another cut out of that. Now, granted, it's more evenly distributed. So it's still the big pie. The pie's still the same size. You're just getting a little bit less of it than you did before. That's all it is. That's what dilution is. They're just cutting up the pie into more pieces and cutting up the money a little bit more. That's exactly what's happening in dilution. All right?
A. Bittner says they issue shares to buy ships. And David
I don't care why they issue shares. The bottom line is they issue shares.
Okay.
Because, by the way, I shouldn't say I don't care. I do care why they issue shares. If they're issuing shares to make acquisitions, buy ships, great. But your job is to calculate, has it worked for? So let's look at an example here.
David's saying they bought 12 ships over the past 7 years.
So they've diluted people by 30%.
And they rent ships out to people.
And their revenue's up a lot, so maybe it's worked, guys.
You want to move on to pillar number 6?
Yeah, and that's part of the deep dive you should do. Pillar number 6.
Which we can certainly do for our patrons, Paul.
Yes, we can.
Current assets over current liabilities is pillar number 6.
58.75 versus, 132. That's a big difference, guys. Now let's see their last quarter. Let's see, 152. It seems like they're always underwater on that thing. So maybe it's just part of their business model. That's part of the other deeper dive. Go figure out why is it that their current assets are so much lower than their current liability. That's a big difference, guys.
Pillar number 7 is free cash flow, Paul.
Are you trying to tell me that there was very little capital expenditures in this company? Do 87.5 versus 165. So check mark there. Yeah! Check mark there. And then 108, 154, 148.
The average free cash flow over the past 5 years is 153, Paul.
Times 20 equals 3 billion, and it's selling for 500 million. I mean, I don't know. Seems like a pretty good deal to me.
Wait a minute. Wait. Hold on a second.
That tells me that something's wrong.
153.
What math did I do wrong, guys?
153 is the free cash flow times what multiple did you use?
So let's put it this way. 564 is their current market cap.
Okay.
And they do an average of 150. This is
millions. This is millions.
7, yeah, million. This is 3.7 price to free cash flow ratio. We want it to be below 20. It's at 3.7. Why?
Yeah, that's where
we got to figure out why.
Got to figure out why.
Trailing 12 months.
You're missing something here.
Trailing 12 months. I know I have to delete that on the screen. Trailing 12 months free cash flow.
So not just incredibly undervalued or unknown, just sort of something maybe we don't know.
And their free cash flow in the last 12 months is 170 million.
David says the industry has a very low multiple.
Well, this is a very low multiple. But why, David, why does it have a very low multiple?
Reason?
What's the reason it has a very low multiple? Because the other ones don't have a low, like the Chevrons and those ones don't have the low multiple. Why this one?
One more time, will you please explain that multiple? This is the biggest step that really gets people, and I want you to just go through it real quick. We found the free cash flow, then we multiplied by some number. For our new viewers, patrons, I'm sorry you've heard this 1,000 times, but I need to hear this sometimes too. Go ahead, Paul.
Price to free cash flow.
This is pillar number 8.
Price to free cash flow is another way of looking at earnings. However, because earnings and free cash flow over long periods of time will be the same. But free cash flow is more on cash in, cash out on a year-to-year basis. Earnings can be affected with depreciation, amortization, tax laws, ways of which to look at earnings. So I look at the free cash flow a little bit more. The market overall should sell for about 15 times free cash flow, just like price to earnings, okay? The higher your growth rate, the more secure the company, pay a premium. The lower the growth rate, the less secure the company, you want a discount on free cash flow. So if a company generates $1 in free cash flow and it's growing like crazy, maybe you pay 20 times that. So you want to pay $20 for that $1 free cash flow because it's going to grow a lot. Let's say there's another company that has $1 in free cash flow, but it's declining. Maybe you pay 8 times free cash flow, so you pay $8. So even though they both have $1 that first year, the prospects are better for this one than this one, so you pay more for it. Makes sense, right?
Mm-hmm.
Why? But 3.7 is low for anything, especially one that's growing. I mean, their revenue is growing.
Yes. I mean, we have checks for PE ratio, profit margin, revenue growth, profit growth. They're selling off more shares.
Who requested this?
Spicer.
Yeah, Spicer.
David Pumpkins requested this, huh?
Yeah.
All right, this is an interesting one. What do the charts look like, Mo?
They've had a great run since September. Right now, they're kind of just going sideways. I could see them going up or down. Right now, I wouldn't be adding or looking to go short on them, but they've had a great run since September.
Okay. Yeah, I mean, they got down to freaking $10 a share, $9 a share back in March and April. So I know we might want to look at this one. This is not one I'd put a lot of money into because how small it is, but I mean, selling for 3.7 roughly times free cash flow, that's a great multiple. It's hard to find that.
This was not Offshore Partners out of the UK. If you're in the Patreon, I would let you know that our newest brainchild that we're going to do is we're going to have videos that analyze a company like this. And then for our normal YouTube videos, for our normal YouTube viewers, we would stop the show basically right now. For our patrons, Paul and I are just going to stay on the show and deliver more of a deep dive. We'll open up the 10K and all the deeper financials for you right then and there, and then put that video out privately just for you, the patrons. So that's sort of our plans.
And 2 more patrons have joined since I announced it last.
That's great, Paul.
Well, I just want to say that this is like we're not on 130 spots. My whole point is, within 2 or 3 weeks from now, this thing's gonna be full at $8. You're not gonna be able to get it again at $8. Don't miss this opportunity because trust me, in a year you're going to be going, oh my God, why did I wait?
Paul, other people are asking for REGI.
REGI. Renewable Energy Group. By the way, I believe not is purely shipping, which I like that more than one that's actually needs oil prices. I still like the shipping idea more because ships will have multiple uses. They might be able to, okay, maybe our shipping is, I don't know. I just look at it going, I like that. To me feels like a better option to me than let's go transport. When I say transportation, people think transportation, think shipping. Transportation could be like the lines, the pipes, and all that stuff. I really like the shipping kind of business.
This is Renewable Energy Group. The ticker is REGI.
Producer and refiner of biofuels in the oil and gas industry. The company's operations include acquiring feedstock, operating biorefineries, and marketing. What the heck is this? Okay, let's look at this thing.
Market cap?
Market cap, call it $4 billion. Okay?
PE ratio, pillar number 1.
7, check mark there. Margin.
Profit margin over
is
10.
About 4%. That's about right here. So X there. No dividend.
No dividend. Okay.
Okay. So far a check on PE and an X on profit margin is not very high.
Revenue growth over the past 5 years is pillar number 3.
Your revenue growth the last 5 years. It's a check mark here. 1.39 to 2.6. So check mark there.
How about profit growth, Paul?
Might have been an acquisition here. That's a big jump for 1 year. Looking at their previous years, that's a really big jump right there. I wonder if there's an acquisition there. So something to look out for. Mm-hmm. Net income, oh boy.
What?
Lost 151 million and then made 380. Check mark there. That acquisition might have been part of why there were so many costs. I don't know. So there's a check mark still.
Pillar number 5 is shares outstanding.
We have not, oh my God, our first one. 43.96 versus 42.32. I think that's our first decline in shares outstanding today.
It's pretty good, Paul. 4 out of 5 checks. Pillar number 6 is current assets greater than current liabilities.
Current assets, $678 million. Current liabilities, $232 million.
Hey.
And guess what, guys? Total liabilities of only $276 million. So we have to take $400 million off of our market cap. So instead of being a $4 billion company, it's a $3.6 billion company now.
We're doing that because if you buy this company at $4 billion and they have $400 million in the bank, you obviously get all that as well. So we're taking
net
it off.
$400 million in the bank. They can pay off all their debts with their cash and still have $400 million left over. So price to free cash flow, kiddos.
Pillar number 7, free cash flow growth.
Okay, this is not bueno.
Uh-oh.
So we have 16 million versus a negative 88 million. That's an X.
Oh boy.
Ain't nobody got time
Okay,
for that.
now 17, negative 37, 320. Jesus.
This is all over the place, Paul.
All over the place.
Divided by 5, 45?
Yeah, 45.
45
Is that what it is?
million. Yeah, 45 million is the average free cash flow, which is all over.
So right
the
now
place.
it's selling for 80 times free cash flow. That's an X there. So the most important, let's look at the last 12 months. This is inconsistent, guys. It's very inconsistent. Their operating revenue sucks. Their cash from operations, sucks. Look at this. What is this random huge jump right here and here? Do they sell? I don't know what, I don't know. I don't know what would be involved with selling. That's selling a division would be investing activity. It'd be a net divestiture. I don't know. This one's, I wouldn't touch this at this. It's just so inconsistent. Let's see the last 12 months of their free cash flow.
People are saying I'm a little heavy on the air horn sound effect. So just let me know in the comments if the sound effects are adding or taking away from your experience.
Now, I will say their last 12 months, they've generated $530 million in free cash flow. So why is that? Do the air horn? Yeah, to do the air horn.
Sorry, that was too much air horn. I'm sorry, guys. Keep going, Paul. I love you.
So they did $530 million in free cash flow in the last year. This is all over the board, guys. You got to figure out why all of a sudden their free cash flow has skyrocketed so much.
It's funny when you say it's all over the board. I'm looking at the charts and it's all over the board too. You have these big gaps in prices up and down.
What's a gap, Mo?
So if you have a stock price that say it's at $5, all of a sudden the next morning you wake up and it's at $15, or it's at 15 and then it just gaps down to 5. So it just keeps bouncing.
It's actually
all
a gap in the chart. You'll see it when
it's a big.
There's like literally,
Black
because
opening.
overnight it changes in price.
Yeah.
So there's a big gap in the chart.
Yeah. So, it's all over the place.
So as opposed to investing in Renewable Energy Group, what do you, for someone maybe first viewing this video, what kind of companies do you like, Paul? Instead of ones that are all over the chart going up and down, what's your take home on solid investments in your mind?
Ever since I was a kid, I always liked making stuff. You know, whether it's software. I mean, that's why we have the Patreon so much. It's the software, doing all these things. I look at a whole industry like that and say, it's not just one company. All these companies are very similar. So to me, I'm like, there's too many industries out there. There's too many companies out there. Like, why do it? You know what I mean? Now, if you want to make a play on the fact that natural gas prices or oil prices are very low or very high, you want to make that play, go. I think it's a trade. I think you do commodities, energy as a trade, not as a. I just don't get, from my standpoint, if you want guidance from me, I'm not buying it or selling it based on fundamentals. I'm going to trade it on momentum at some point.
It's almost speculation at that point.
Yeah, for me, it doesn't work for me. But again, yeah, it's what speaks to you. Somebody out there probably works in the energy field. Doesn't Phoenix?
Yeah, I think we have a couple guys that work in the energy field. Also, Tom in the $100 level.
Yeah, so I'm just not a
I
huge
think
fan
he's
of
working
that.
right now.
Goldie says, does this make you biased before you start, Paul? Boys, you should have seen Paul prior to this show. He's not in love with energy companies.
Of course it makes me biased. That's the whole point of this, is I wanted to expose my bias to you guys, which I'm showing you now. But at the end of the day, I want to show you guys, the whole goal of this channel is that we learn together. And part of it's going to be me talking about it, about what my biases are. Now, I could have come in here and said, you know what? I kind of beat this thing to death, and it shouldn't happen. But everything I explained ahead of time ended up being true on all the companies we looked at, except for one. So I look at it saying, is my bias showing up? Absolutely. Bias is in everything we do, especially in investing. That's what makes investing hard, is taking your bias out of it, right?
If you're biased toward everything money, we would absolutely love if you tickled that thumbs up right now. The watch to tickling is low. The PE ratio for watch to tickling is low. And we need that just right underneath Paul's little baby underarms there. He loves to giggle like a small child. And yeah, that's what he loves doing. Okay, guys, Paul, what do you think? We've hit the 2 o'clock wall. I have some more companies.
Let's pick different companies besides energy. We've already beaten energy to death. I don't think we're going to find anything different in energy. I mean, what else is there out there?
Well, everyone keeps asking for Canadian solar, but you're not.
Let's look at Canadian solar.
All
Let's
right,
give the
fine,
people
we're
what they
doing
want.
it.
Jesus
Fine.
Christ.
All right, Canadian solar. You asked for it, you got it. Toyota, Paul, remember that? Paul, Toyota.
You asked for it.
You asked for it, you got it.
Toyota.
Canadian solar. Let's do it, baby.
Okay, Canadian Solar is a Canadian solar power company. Thank you, White Charts.
You're very astute.
It's an integrated provider of solar power products, services, system solutions. The company engages in designing, developing, and manufacturing solar ingots, wafer cells. So basically, your solar panels, right?
Mm-hmm.
$3.6 billion market cap. PE of 17.55, so check mark there.
I like that.
Ooh. Okay, so we'll go to the last 12 months.
Profit margin.
About 6%, roughly. Give or take.
We
So
like
we'll go X
we
there.
like it to be above 10.
Yeah, so X there on that one. No dividend right now. So far, one check and one X.
Revenue growth over the past 5 years is pillar number 3.
Revenue growth. It's actually an X. 3.4 down to 3.2.
Uh-oh.
X marks the spot there. So guys, it's already selling for a premium at 17.5 times earnings, and the revenue is going down. We'll keep that in mind here.
Profit growth, pillar number 4.
Profit growth, oh my lord, marginally down, but it's still an X. 171.86 versus 171.58. So it's still an X there.
Pillar number 5 is shares outstanding. Please tell me they're not selling shares.
They are selling shares, guys.
Oh, boy.
55.7 to 59.6. That's an X as well.
Okay.
X marks your mom's spot.
Current assets greater than current liabilities is pillar number 6.
3.9 billion in current assets and 3.1 billion in current liabilities, so check mark there.
Check mark?
Chickadee, right? 3.9
Yeah.
versus 3.1, right? Yeah.
Free cash flow growth is pillar number 7, y'all.
Free cash flow. Okay. Huge capital expenditures here, guys. Negative 230 to a positive 309. Check mark there. Yeah. Negative 1.4 billion. A positive 75 million and a positive 200 million. Oh, I went to the wrong line. I suck.
Uh-oh, Paul.
I suck. It's actually worse than I expected. So it's still a negative 230 to a positive 309.
That's good.
Still check mark there, but now we have negative 1.4 billion, negative 107 million, and negative 100 million.
This is crazy.
There's no free cash flow.
There's no
It's
free
negative.
cash flow.
There's no free cash flow. X there too. Guys, I don't know. The Canadian Solar, the people have spoken, and I'm just avoiding it. I'm telling you guys, energy companies are very, very difficult. I don't know what it is with that industry. There's so many bankruptcies in that industry. It's just weird, and companies just coming. Chesapeake Energy was a huge company, and it went under.
You froth at the mouth when we analyze companies that have a nice, steady, beautiful little profit and revenue growth.
You know why?
They're buying back
I
shares.
go to bed at night like this.
Not
and I wake up in the
wondering what's
morning
going to
richer.
happen. Yeah.
And then I go to bed like I wake up richer. It's like, as opposed to, oh my God, what's energy going to do tomorrow? If energy has a bad year this year, we're screwed.
I see.
I don't like that.
Okay.
Mo, what do you think about the chart on Canadian Solar?
Yeah, I'm actually looking at it right now. This is something that we could go in and maybe tomorrow or what day is today? Tomorrow or Thursday, jump in this thing and grab a little bit. There's definitely opportunity to get this thing about $58 and ride it to maybe $63, but it's going to be tight, that's for sure. It's not an ideal time to get in, but it's possible.
All right.
That was Canadian Solar. Paul, I do love, we can finish the show a little later. I love a little Q&A. But Billy, are you a patron? Because you sound like you should be. Billy says that UHN, if you want to switch sectors altogether,
Health.
he likes health, and he says this might get after all 8 pillars.
I don't even see UHN.
Does he mean United Healthcare?
I'm sorry.
UNH?
UNH?
UH.
He's wrote UHN several times.
I'm sorry.
I don't know.
It maybe. Oh boy, Billy. Oh boy, Billy.
Billy, type the ticker symbol.
Yep. UNH. It's got to be right. And the UHN doesn't exist. The show has come to a halt.
SCL.
What's SCL?
Nick Larmore's requesting this one.
This is a
Stepan
patron.
Company?
Okay.
Apparently, they're allowed to legally import cocaine.
That's definitely.
Come on.
That's what he said.
That sounds like a Reddit comment.
Wait. Hold. Don, can you?
UNH. It's UNH.
Don, repeat that real quick.
Don't do insurance, though.
Is that what it is?
Yeah,
Insurance?
it's healthcare insurance.
So, Nick,
Yeah.
correct me if I'm wrong on this, but apparently SCL, you said they can legally import cocaine. And I don't know if that's true or not, but this was one that he did bring up in the Discord.
Do you want to look at it, Paul?
Let's look at it.
What?
Stepan Company manufactures and sells a variety of cocaine. What?
We do have homes in
Of
Mexico.
chemicals and chemical-based
so-
products. That's eyes like lit up.
Scroll up so we can show the viewers what company this is. I don't even know.
This is SCL, Stepan Company.
Okay, Stepan Company, SCL. Let's take a look. Apparently, they're importing coke.
Surfactants?
Surfactants?
Surfactants or chemical
Surfactants.
ag agents.
Okay.
All right, let's go
do
do
it.
this.
This is-
$2.7 billion market cap, 23.8 PE. X marks the spot.
Oh boy.
About a 7% margin looks about accurate. So another X right there.
2 X's off the bat. You'd think with importing coke, you'd have good numbers. Pillar number 3 is
1% dividend
1%. Revenue
is
growth is pillar number 3.
$27 million a year.
Okay, keep going.
$27 million a year on 2 points. Is that accurate? That's accurate. Okay, sweet dividend, bro.
Revenue growth. Let's look at it.
Okay, revenue growth. Boy, look at this massive revenue growth. 1.776 to 1.859. The check mark. Guys, this thing is crawling.
Okay.
Actually down the last couple years.
Profit growth, Paul.
Profit growth, check mark. 76 to 103. Check mark there. Good boys.
Pillar number 5 is shares outstanding.
Does everybody just not want to find shares that are decreasing? 22.7 down to 23. X there. Looks like the cocaine business is good for issuing more shares, too.
Okay. Current assets greater than current liabilities is pillar number 6.
833 million versus 361 million. Oh, but they have more current assets than total liabilities. The mamma jamma of all check marks.
You
So that's
like
good.
that? Okay,
I
great.
do like that a lot.
How about free cash flow? Pillar number 7.
Okay, free cash flow over the last 5 years. You ready? 63 and 113. So check mark there. And then 109. And then 120. And then 985.
The free cash flow over the past 5 years, the average is $98 million.
Let's round it to 100. I'm going to multiply this one by 15. And the reason being, first off, $100 million average. Their dividend was $27 million, check mark. They can afford the dividend. But I'm going to multiply by 15 because there wasn't a lot of growth in this company. In fact, I would multiply maybe like 12. So at most you should pay is $1.5 billion to this company.
The current market cap is $2.7 billion.
Minus the $200 million in extra cash they have, so call it 2.5. So you need about a 40% drop in this company before I start looking at it. And it's currently at $120 a share, and they're issuing more shares. So maybe anything below 70, I'd start looking at it. And it was there this year, in the last year. Below 70, I'd start looking at it. That's my opinion on it. I look at it saying, okay, if you want to look at this company in more detail, go get ready once the price starts dropping. But it definitely isn't growing a lot, guys. Oh, let's actually look at the last 12 months. Because we saw revenue already declining, guys. If you look right here, the revenue went from 1.92 to 1.99 down to 1.86. So they're declining revenue. Let's see if that continued on in 2020. A little bit, not by much, but a little bit. So maybe it's rebounding a little bit. We'll see.
That was Stepan Company.
Stepan Company.
SCL.
Sorry.
Yep. All right, guys. It's after 2 o'clock. We usually do this for an hour. Paul's voice is about to get fried. We do take your suggestions as you're writing and make note of them. Obviously, the patrons know we're taking your suggestions and we're going to take more of them. Paul, mention one more time for the new viewers the Tesla giveaway to the patrons, especially those 7 to 10 who just signed up today.
Well, so first off, go sign up for the Patreon because once this level is filled, I think we only have 130 some spots remaining, then you will not be able to get our software for $8 a month and get the Discord for $8 a month. It's going to go higher every single time it gets filled. We are building the software. We're doing a giveaway. When we hit 50,000 and then 100,000 subscribers, one Patreon member will get a Model 3 Tesla. And every month they're in is one vote, one entry that they get. So this is a massive giveaway. Other accounts out there give away $10,000 for 1 million subscribers. We're giving away 2 Teslas at 50 and 100,000 subscribers, one each time. So we're giving a lot of value, guys. We're building this entire channel around the Patreon group, about the software and the community. This is exactly happening. It's way more than anybody else does. Our goal is to get this thing where everybody can talk about investments all day long and make a lot of money off of it. I will tell you, our Patreon group, the $100 level, is by far the most active. There's over double the number of messages in that group than the next highest channel. So be active, be an active participant. Don't be afraid to spend because it'll be well worth it. The software is going to be worth $100 a month when we add Trader Mo's software in the future. I'm telling you right now, the biggest value play I've ever seen in my entire life is joining our Patreon right now. I don't care what level, just join it. You're not going to regret it. And if, you're not going to regret it. It's going to be the best thing you make, best financial decision you make in your life. And I'm not kidding about that.
Along these similar lines, folks, we got this idea because my son follows Mr. Beast, a monster when it comes to giveaways and 50 million subscribers. And so, for example, I did not tell Paul this information. I wanted to bring it up on air. So, for example, Mr. Beast gave away a million pennies, which is $10,000, Paul, when he hit 1 million subscribers. So 10 grand at 1 million. When we reach 50,000 subscribers, Uncle Paul will be swiping his credit card for a $38,000 car to one of our patrons. Paul, I did some research.
Okay.
About other YouTubers out there and what they're giving away at 50,000 subscribers, Paul.
How'd you find this?
Well, my son and I, Gio, did some research. And in comparison to a Tesla, Paul, I will put up, this will be a Patreon post, Don. I'll get you the pictures. Here's what I was finding. Someone gave away about $50 in animal squish toys. A kayak guy who specializes in kayaking gave away a $400 battery that you take on your kayak.
Sweet.
A videographer gave away a $400 Steadicam. I did find a guy that gave away some pins, some like Yu-Gi-Oh pins, like 6 little pins you'd put on your backpack. And other people were giving away like just a signed picture of themselves. So in comparison, folks, your Uncle Paul and 2 of our patrons in combination will be getting a Tesla this year to drive around like crazy people. You can race me down I-77 here in Ohio. And it's a drastically more absurd of a giveaway than I think anyone in their right mind would do. And why can we do that, Paul? Because
so guys, I have 10 businesses. I'm trying to build this channel long term. All these other, we joke about clickbait all the time. And Seth has said he finds guys that say, guys, I'm sorry, I have to do clickbait because I got to pay my bills. We're not in that position. We're in the position of doing what we think is the right way to do it. That causes a lot of internal arguments sometimes between Seth and I about he wants to do more action-packed stuff. And I sit there and say, no, we're going to build this whole channel the way we want to do it, which is teaching investing and not doing these cheesy things. So that's the benefit for you. You know, that can come across as opposite of everything, and that's the goal. We don't want to have it be something where we're just trying to make money. Trust me, I want to make money. But for the first time next month, I will generate a profit on this channel for the first time on this business in the last 2 years. And I'm very happy that it's finally happening. But at the end of the day, I'm not here just going, oh, thank God I can sit back and relax. Now it's, let's go make more money so we can do bigger things. We're talking about creating shows from this. We're talking about doing trips, all this stuff. So trust me, the software is going to be a big focus for us. I'm going to invest a lot of money into the software because I want to make it better and better.
My son's reminded me that one of the channels he saw, the $50,000 subscriber giveaway was a Zoom call you could have with them. So, guys, this is completely absurd, and we're gonna have fun doing it. We're gonna make some promo videos. Europeans can win the Tesla. I called Tesla. If you have a Tesla dealership in your country that you can get to, you can get your Tesla. If you cannot, Paul, you can just take the cash, right? But
you can take the cash, but I would love it if somebody in Europe won and I just flew there and got the car for them.
With them?
Yeah, with them.
We'll do it all together.
We'll do it all together, except I'm going to fly business class and you're going to fly in coach.
I'll be back in coach, yeah.
Yeah, I'm going business.
Okay. Yes, so if you're in the I called Tesla. Yes, I called Tesla.
Fun eating out of
We
a
got to
tin
do that.
cup.
We got to have this video of you and coach, like videotaping me, and I just go, close the curtain.
It's Home Alone. It's Home Alone. You're the parents in first class.
Close the curtain. Close the curtain.
And I'm back in coach carrying all the gear. But that's what we've set up.
All the gear.
That's what we've set up, and that's what we'll do. So it's completely ridiculous, and it's all brought to you by Paul Gabriel, a guy who does not care about giving away a Tesla or, frankly, making money for this show this year.
I think the Tesla giveaway pretty much guarantees I'm not going to make money on the show this year.
Mason's saying exactly what I thought. Michael Scott's flight to Canada.
I don't remember that.
He was in first class and he sent everybody else behind him.
I don't even remember that
Oh, it was
episode.
great. Also, office reference. You were talking about that battery, putting it in the kayak or something.
Yes.
I'm thinking of when Michael gave. He was supposed to give everybody laptops, but instead he gave them a lithium battery. That's exactly what that giveaway was.
No.
Well, he was supposed to pay for college.
He was supposed to pay for
first.
college, and he's like, but guys, and he's like, everybody's excited because he's giving them laptops. He's like, no, not laptops. It's the battery.
You can't run a laptop without a lithium battery.
Yeah, it was great.
That's this kayak guy you're talking about.
David's saying if someone in the U.S. wins, can we come down? I mean, we can't make any promises with COVID, but we'd love to somehow do either you fly here for a show, or we go buy the Tesla together here in Cleveland, or somehow we get to you. But obviously, money really doesn't matter when it comes to this. And I think that's the great point, Paul. Is we're going to come out with a video later this week as well, in that there's been a stir up about YouTubers talking finance this week, with some YouTubers admitting that they are basically clickbaiting you into clicking on they're talking you into these high risk 10x, 100x stocks that we have never done. Paul's been very adamant about this, and we'll go into a long form video about why. It's unfortunate that they're getting you to think that you can just very easily 20x your money, when what they're really trying to do is 20x their money because they need it so bad. But both Paul has 10 businesses, Mo has plenty of money. I have 2 businesses myself that run my whole life and pay for everything. And so we're doing this, I wouldn't say out of the kindness of our heart, Paul, just you love education, and so do I.
Yeah.
We try to talk you out of those clickbait companies.
You do, yeah.
There's a new channel that started on Patreon today. It's called FOMO Confessions, and it's tell your stories about when you have bought these hype stocks and been destroyed by them. So we're trying to get people to stop doing that.
And someone said they reduced the price of Tesla Model 3. So maybe, Paul, maybe they'll get some upgrades. But we will be coming out with promo videos, and we have some time to get this done.
$38,000 is what you could spend. Everything above that's out of your pocket.
There you go, Paul. Good.
So I'm not going to pay the tax for you. You'll survive.
You're right. And if you want the auto driving and
whatever,
all the upgrades,
just tell me. You got to just pay for it.
Great.
38,000 is what I'm paying for.
All right, guys. Again, just this week, we will be talking Palantir. We will be talking the craziness of GameStop and another deep dive into Pfizer, an update on that. Again, if you guys click, watch, and love the shows, we'll bring you what you guys are interested in. So, yeah, I feel good. Don, is that it? Is that everything, Don?
We can wrap it up if you're ready.
Thank you to everyone. You guys are incredible, and Paul and I chuckle in that literally we think about this show and our followers
Way
and our
too
patrons.
much.
It's just like it's absorbing our entire lives.
Even Mo's into it now. Even Mo is obsessed with it.
And yeah, you guys are incredible.
awesome.
All of you out there
great.
following us all over the world, we love you, and we'll see you on Thursday at 1 p.m. Eastern. So many videos coming out per week, and yes, for Paul and Mo, we love you, and thanks, guys. See you soon. Thanks for watching.
See
Love
you
you
guys.